Welcome back to Investing Talk Podcast. Today, we're setting our sights on Futu Holdings, specifically their upcoming earnings report. Our mission is to quickly arm you with everything you need to know about what to expect when those numbers hit, allowing you to be truly well-informed in a short amount of time. We'll be sifting through the latest data, diving into analyst expectations, and gauging the subtle shifts in market sentiment, all tailored specifically for Futu. Before we jump into the details, if you find value in what we do here, please consider subscribing, liking, and leaving a comment. It truly helps us bring more insights to you. And if there's a specific company's earnings or financials you'd like us to dissect, let us know in the comments below. We'd love to hear from you. You can also support us by buying us a coffee, details in the show notes.
And there's certainly a palpable sense of anticipation around this earnings season, especially for a company like Futu Holdings. They're genuinely known for their aggressive, disruptive presence in the fintech space. This specific report isn't just another quarterly update. It's a crucial pulse check on how a leading tech-enabled brokerage is navigating what has been a relentlessly shifting, often unpredictable global financial landscape. It offers us a valuable window into broader trends shaping digital wealth management and how investors are engaging with financial platforms today.
So digging deeper into those specifics, when exactly can we expect Futu to release these latest numbers? And what's the general consensus from analysts out there? Give us the concrete details, the report date, the time, and those all-important key financial targets everyone is watching.
Absolutely. Circle August 20, 2025 on your calendar. The report is expected before market open that day, and there's a conference call scheduled for 7:30 a.m. Eastern Time. That call often provides incredible insights straight from management, so it's worth noting. As for what analysts are generally expecting, the consensus is pretty clear. Revenue is projected to hit $539.76 million, and earnings per share, or EPS, are forecasted at $1.99.
Okay, $539.76 million revenue, $1.99 EPS. What about the whisper number? Is there any buzz around that?
Yeah, the whisper number. Public sources don't explicitly state one for Futu this time around. However, historically, Futu has often seen its whisper number land slightly above the consensus. What's insightful here is that this historical tendency to beat, even by small margins, suggests either incredibly disciplined guidance from management or, a resilient business model that consistently outpaces conservative analyst models. For this quarter, though, no concrete, widely cited whisper figure has materialized yet.
And company guidance, did they give any specific targets for this quarter?
No, in terms of formal company guidance, they haven't provided explicit forward revenue or EPS guidance for this specific quarter in their previous public disclosures. What we do know is that management has consistently highlighted their focus on three core areas: continued user growth, expanding their wealth management services, and maintaining operational efficiency. These are their strategic pillars.
That's fascinating context about their consistent performance, but also, isn't there a risk that past outperformance could lead to an even higher bar of expectation, making any slight miss feel even more severe this time? Because Futu definitely has a history, and it's often a pretty eventful one. How have they actually performed against expectations in past quarters, and what typically happens to the stock after they report? This is where we can start to see some patterns emerge.
That's a very sharp point, and the market's memory is indeed long when it comes to expectations. Futu's history provides a fascinating pattern, highlighting both their strengths and the market's high demands. Looking back at the last 4 quarters, the company has, in fact, consistently met or slightly beaten analyst expectations. For instance, in Q1 2025, they reported an EPS of $1.96 against a consensus of $1.95, a small but notable $0.701 beat. In Q4 2024, they also exceeded consensus by a small margin. Prior to that, Q3 2024 typically saw them either meeting or slightly beating estimates, and in Q2 2024, they reported a robust $1.11 EPS, which is a positive surprise at the time.
Okay, so a pattern of meeting or slightly beating, but what about the stock price reaction? That's often the real story, isn't it?
Exactly. What's truly fascinating here is the post-earnings price reaction. This is where Futu really sets itself apart. The stock has often demonstrated volatile double-digit percentage moves right after earnings are released. For recent quarters, we've seen swings ranging from a significant gain of, say, 7% to a sharp decline of 11%.
Wow, +7 to -11%, that's a huge range.
It is. These moves often involve immediate price gaps, either up or down, that then either hold steady or partially retrace throughout the trading day. This extreme post-earnings volatility isn't just a number, it's a stark reminder of the market's razor-thin patience for high-growth fintech. It highlights how heavily investors are weighing future potential against immediate results, making every single metric a potential catalyst for massive swings.
So it's not just about the beat or miss, but the magnitude and maybe the underlying metrics too.
Precisely. Beyond the headline numbers, some key metric trends are also worth highlighting. Their user growth and platform engagement have continued to rise, which is crucial because it directly fuels their recurring revenue base. Their net margins remain remarkably strong, recorded at 41.74% in the most recent quarter.
41% net margin, that's incredible.
It really is. I mean, for every dollar of revenue, nearly 42 cents translates directly into profit. That's truly exceptional efficiency for a company in this space. And their return on equity is consistently above 23%, which is a fantastic indicator of how effectively Futu is using shareholder money to generate profits. It's important to add the nuance here, though. While these underlying operational metrics are robust, the overall revenue can still fluctuate quarter to quarter, often tied directly to broader trading activity and overall market sentiment, which can be quite dynamic.
That's an incredible range of post-earnings movement. It really highlights how much is riding on these reports for Futu. But beyond their internal performance and efficiency, what larger currents are they swimming in? Because, as we know, earnings never happen in a vacuum. What's been happening in the broader market, or specifically with Futu, that could truly sway these upcoming results?
That's a critical question, and the external environment definitely plays a huge role. During this past quarter, from what we've seen, there haven't been any large-scale product launches or major business model shifts reported by Futu. Instead, their focus has been on consistent, incremental improvements, continued marketing efforts, and ongoing technology innovation for their core platforms, like Futable and Mumu. These are continuous efforts designed to deepen user engagement rather than big, splashy announcements.
So steady innovation, not big disruptions this quarter. What about the market backdrop?
Right. If we connect this to the bigger picture, the sector and macroeconomic trends are definitely significant. The global brokerage sector, as you know, has seen elevated volatility. However, technology-enabled trading platforms like Futu are somewhat uniquely positioned. They're benefiting significantly from increased engagement from younger investors and a growing global demand for diversified financial services.
And the regulatory side, especially concerning China.
Yes. Another critical piece of the puzzle is regulatory scrutiny on Chinese fintech companies. This scrutiny persists, of course, but what's noteworthy is that recent periods have seen a relative stabilization in key markets. This isn't just about predictability. It potentially frees up management to focus more on growth initiatives rather than constantly navigating policy shifts, which is a significant tailwind for innovation and expansion. We've also observed the impact of broader interest rate trends and an increase in cross-border capital movement. Both of these factors have generally strengthened trading volumes, which directly benefits platforms like Futu.
Okay, so potentially easing regulatory headwinds and favorable trading volume trends. What are analysts saying more recently?
Well, in terms of recent analyst commentary, they remain broadly positive on Futu. The consensus among analysts predicts high single-digit earnings growth for both 2025 and 2026. What's particularly interesting is that in the fortnight leading up to this earnings report, we haven't seen any major rating changes or significant price target revisions from the analyst community, suggesting a relatively stable, positive outlook.
It sounds like they're navigating some choppy waters quite skillfully, benefiting from broader trends while managing regulatory headwinds. Given that stability and their consistent focus on operational efficiency, what are the technicals of the stock telling us right now? How is Futu behaving in the market itself leading up to the report? And perhaps even more tellingly, what are the options markets signaling about the expected move after earnings?
Yeah, the current technical setup of Futu is quite telling, and it aligns with that sense of optimism. Shares are trading near recent highs, hovering around $165.18 as of August 14th. This is a substantial gain from both its 50-day and 200-day moving averages. This kind of upward trajectory, often termed a pre-earnings run-up, generally suggests a couple of things. Either significant investor optimism about the upcoming results, or strategic positioning by traders who anticipate an upside surprise. It certainly indicates that the market is already leaning somewhat positive.
Okay, so the chart looks strong going in. What about the options market's bet?
Right, turning to the options market, this is where we get a more quantitative sense of what a stock's price might do post-earnings. The implied volatility, derived from the pricing of at-the-money straddles, which are basically bets on how much a stock will move up or down without predicting the direction, is quite high for Futu. The options market is currently pricing in a significant move of plus or minus 8% to 10% for the earnings event. 8 to 10%. That's a pretty big implied move. It is. This means options traders are collectively betting on a substantial swing in either direction once the numbers are out. This high implied volatility itself reflects the high degree of uncertainty or potential for a surprise that they foresee. As for the call and put options ratio, which often indicates bullish or bearish sentiment in the options market, it's not explicitly reported in our current search.
Sure.
However, based on historical patterns for high momentum growth tech names like Futu, it's typical to observe elevated call activity leading into earnings. This suggests that a notable portion of options traders are positioning for an upward move.
Wow, an 8 to 10% expected swing is a huge number. What specific factors do you think contribute to Futu having such high implied volatility compared to, say, a more mature financial institution? And with that kind of potential move on the table, what does this all mean for Futu holdings? If we try to look forward, what are the best and worst case scenarios when these numbers finally hit? It feels like there's a lot riding on this report, and it could indeed be a wild ride.
That's a great question, and it really comes down to Futu being a growth stock in a dynamic, high expectation sector. Mature institutions often have stable, predictable earnings, leading to lower volatility. Futu, on the other hand, operates in a space where small beats or misses on growth metrics can have outsized impacts on future valuations, hence the higher implied volatility. So let's lay out the potential outcomes for this report. In the bullish case, we would see what's often referred to as a strong beat and raise. This means not only would Futu's revenue and EPS figures top analyst estimates by a significant margin, say 5% or more, but it would also be accompanied by robust growth in key metrics like user acquisition and overall assets under management. Crucially, management would likely guide for above consensus fiscal year growth. Positive commentary regarding regulatory stability in their key markets and exciting updates on product innovation could then fuel a significant move higher for the stock.
Okay, that's the ideal scenario for bulls. What's the downside risk?
On the flip side, the bearish case would involve a miss on either revenue or EPS, or perhaps more subtly, disappointing trends in their fee structures or profit margins. If management signals a deceleration in user growth, which, as we discussed, is a core driver for them, or highlights any new unexpected regulatory challenges, the stock could decline sharply. This is especially true given the current high expectations already priced into the stock. Therefore, any perceived weakness or new headwind could trigger a swift negative reaction.
So it really comes down to growth and guidance, maybe even more than just hitting the headline numbers.
Exactly. This raises an important question for investors. Beyond the headline numbers, what's the single most important metric for them to watch? For Futu, it's undeniably their active user and asset growth rates. These are the leading indicators for their future earnings power. While headline EPS and revenue are important, the sustained expansion of their user base and the assets they manage truly dictate their long-term trajectory and growth potential.
That really brings it all into focus. The user growth is the engine. So given everything we've discussed today, from their historical outperformance and the market's high expectations to the current market sentiment and potential volatility, what's our overall leaning for Futu holdings right now? And what are some ways listeners might think about approaching this earnings event?
Our overall leaning for Futu Holdings is neutral to lightly bullish. We definitely acknowledge the company's strong track record of outperformance against estimates, which is a significant positive. However, this is balanced by the fact that the stock has had an extended run-up leading into this report, and expectations are already quite high. This means there's less room for error, and the market might be less forgiving of any perceived shortcomings.
And the confidence score, where would you put that?
On a confidence scale of 1 to 10, we'd place our score at a 6. This score reflects the company's consistent track record and strong platform engagement, but it also accounts for the recent stock run-up and the inherent sector volatility, which increases both the potential for significant upside and the risk of a sharp downside move.
A6. Okay, so cautious optimism maybe. How should people think about strategies then, given that volatility?
Right. When it comes to trading strategy considerations for this event, it truly depends on your individual risk tolerance. For our more risk-averse listeners, the most prudent approach might be to simply wait for the earnings print to be released. This avoids the binary risk of placing a bet before knowing the outcome. Alternatively, you could consider using defined risk option spreads, such as call spreads if you're feeling bullish, or put spreads if you're bearish, as these strategies limit your potential losses while still allowing you to participate in a directional move.
And for those willing to embrace the volatility?
For those with a higher risk tolerance, a long straddle or strangle strategy could potentially benefit from the high implied volatility we discussed, meaning they'd buy both call and put options, betting on a significant move in either direction rather than a specific one leveraging Futu's history of double-digit percentage moves post-earnings. More aggressive bullish investors might consider buying call options outright, but this should only be done with capital. You are absolutely prepared to lose if expectations are not met, or if the market reacts unfavorably. It's a high-stakes play given the volatility.
That was a comprehensive look at Futu Holdings ahead of their earnings report. It's truly remarkable how much information the market provides if you know how to interpret the signals. As we wrap up this discussion, here's a final provocative thought for you to consider. Given Futu's consistent focus on user growth and platform engagement, how much should investors prioritize short-term earnings numbers versus the long-term trend of digital financial services adoption and global investor behavior? It's a question that goes beyond just one quarter's results and speaks to the evolving nature of finance. Thank you for joining us for this analysis of Futu Holdings. We encourage you to continue exploring and learning, and we'll be back soon with another detailed look into something new.